Why the hell is this still happening? Inflation is supposedly under control. Wages are supposedly up. The economy is supposedly strong. And yet every time you go to the grocery store, it still feels like you're getting robbed. This isn't in your head, and it's not just corporate greed either. Something deeper changed. And until you understand what that change was, the frustration never really makes sense. This episode isn't about blaming one president, one party, or one company. It's about something quieter and more structural. Because there's a big difference between inflation slowing down and prices actually coming back down. And that difference is where most people feel like they're being talked right past. When officials say inflation is down, they're talking about the rate of increase, not the level of prices. Prices were rising fast, now they're rising slower. But slower increases still mean higher prices. If prices jump 20% over a couple of years and then only rise 2% after that, nothing got cheaper. The damage is already locked in. You don't feel relief. You just stop bleeding as quickly. That's why official numbers can improve while everyday life still feels tight. The math works, but the experience doesn't. Here's the part that no one really likes to say out loud. Prices don't come down easily because price declines usually come with something worse. Historically, falling prices are tied to recessions, mass layoffs, or economic collapse. Businesses cut prices when demand disappears, and demand usually disappears when people lose jobs or income. So instead of forcing prices down, policymakers aim for something safer. They try to stabilize prices where they are and hope that wages catch up over time. That's not cruelty, it's risk management. The problem is that for a lot of people, wages aren't catching up nearly fast enough. During the pandemic, prices didn't just rise, they reset. Supply chains broke, workers disappeared from entire industries, shipping costs exploded almost overnight. Businesses raised prices just to survive the chaos. But then something unexpected happened. People kept paying. Once that happens, prices don't snap back. They become the new baseline. Not because companies are uniquely evil, but because competitive pressure doesn't force prices down the way it once did, especially in industries that are already consolidated. Food, energy, housing, healthcare, these aren't markets where price wars break out easily. Once prices reset upward, gravity doesn't pull them back down. In the past, governments had more direct ways to push prices down. Price controls, targeted subsidies, aggressive use of reserves. Today, those tools either don't exist at scale or they create side effects that are politically toxic. Lower interest rates risk reigniting inflation. Higher rates cool prices, but crush borrowers. Direct intervention risks shortages or backlash. So instead of controlling prices, policymakers manage expectations. They point to improving data and hope people eventually feel the difference. On paper, that makes sense. In practice, it leaves people feeling stranded. That's how you end up with a widening gap between official strategies and statistics and lived experience. On paper, inflation is down. Employment is strong. Growth looks steady. In real life, groceries still hurt. Rent hasn't budged. Insurance, utilities, and basics feel permanently inflated. That gap is where frustration turns into distrust. not because people don't understand economics, but because they understand their own bills. For prices to actually fall in a meaningful way, something would have to give. Demand would have to collapse, wages would have to fall, or a recession would have to force a reset. No one in power wants that, so the system chooses stability over relief. Prices stay high, wages rise very slowly, and the burden shifts unevenly over time. That's not a conspiracy. It's a trade-off, and a conscious one. So why is everything still so expensive? Because stopping inflation is easier than undoing it. Because lowering prices risk breaking the economy. And because the tools that once forced relief don't work the same anymore. The system isn't lying to you, but it is speaking a different language than your grocery receipt. And until that gap closes, this frustration isn't going away.